Thank you for joining us. Chances are you or someone you know in South Florida, from Miami to Fort Lauderdale through the Palm Beaches, is facing the possibility of foreclosure on their home. Joining us today with hopefully some good news and maybe some solutions to avoiding foreclosure is South Florida realtor Ellen Mitchel. Ellen is with RE/MAX Executive Realty in Hollywood. Welcome back, Ellen.
Thank you so much. Great to be here.
Is there any good news? I mean, everything we've been hearing is bad news. Homeowners in Broward currently facing foreclosure. How many are there?
It's actually unbelievable. We've got 2.4 million nationwide, which is just incredible. And then with the shadow inventory, we've got 7.5 million.
Explain what shadow inventory is.
Shadow inventory is the properties, or are the properties, that the banks have already taken back through foreclosure or are going through the foreclosure process that have yet to hit the market. And in Broward County and Dade County, we're looking at about a 4 to 6 year supply, 48 to 71 months of inventory, which means it could take that much time for our market to turn around.
My goodness. Tell our listeners the percentage of foreclosure properties or properties that are in foreclosure that you deal with now as opposed to what you used to deal with in your business, say, 5 or 10 years ago.
That's a great question. 5 or 10 years ago, I wasn't dealing with any foreclosure properties. None. Today, I'm a direct broker for Fannie Mae, Freddie Mac, and HUD. So I work with probably about 50% of my business is selling properties for the banks. And then another 30% of my business is in short sales, which is helping a seller that owes more on their property than the property is worth to avoid foreclosure through the short sale process.
You have a designation. It's a CDPE designation. What is that?
It is. It's the Certified Distressed Property Expert. And that means that I've gone through extensive training on helping sellers to avoid foreclosure through the short sale process. But it doesn't end there. Having gone through the training, the banks and the laws change constantly. So when I first went through the training, there was one set of forms, one set of rules that each of the banks used, and that has been changing, I would say, on a monthly, sometimes daily basis. So I'm able to keep on top of the ever-changing options that the banks are offering to home sellers. And it's a much friendlier environment for home sellers considering short sale than it was when I first got my designation about 3 or 4 years ago.
Banks are under a lot of pressure because of bailout money that they received, and they've been under a lot of pressure for the past couple of years because it seems like they are not making money available, and also they're kind of tight-fisted on refinancing. But you're saying the banks are starting to be more cooperative. Why?
Actually, they're more cooperative in both refinancing and short sales. There's a law that was signed into law by President Obama in 2009, and that's the HARP loan, H-A-R-P. And that is a refinance for people that are current on their mortgage that want to refinance for a lower interest rate. People can go on to They can search the Fannie Mae website or Freddie Mac website and do a loan locator. They would just put in their property address. If their property is owned by Fannie Mae or Freddie Mac, they would contact the person who they get their mortgage statement from every month and tell them that they are interested in doing a HARP loan modification. I actually did this myself and was able to get my interest rate down by almost 50%. This is for people that are current on their mortgage, because one of the things that I've been hearing is where are the benefits for the people that are current on their mortgages, and they are able to refinance. There's very little paperwork, and they can refinance for a much lower interest rate.
When we were talking about statistics nationwide, we didn't mention, say, Broward County. How many homes are currently in foreclosure in Broward County?
That is a great question, and I will have to look at my inventory here and give you an answer. We've got 40,000 are owned by lenders in Broward County currently. But we have to remember that there are 124,000 whose owners have already received an initial foreclosure notice or notice of default, but have not been foreclosed on yet.
124,000 just in Broward County.
I'm sorry, in Broward and Dade counties.
In Broward and Dade County.
Right, 124,000, and that's what we call the shadow inventory. They haven't yet been foreclosed on, but they've already received an initial foreclosure notice or notice of default.
When you look at statistics nationwide in like metropolitan areas, do you know how we fare as opposed to other parts of the country?
I absolutely do. We are up there with Las Vegas, and California is they call us the 3 states, the top 3 in terms of the levels of foreclosures in our area. And the reason for that is because other cities across the country didn't see the type of appreciation that we saw. Mm-hmm. They appreciated slowly over time, and so when there was a market correction, they didn't have this large decrease. We appreciated so rapidly, and obviously our employment didn't increase at the same capacity. Therefore, we had this, this looming challenge that is now come down and something that we have to all deal with. We've got 6.3 million homeowners nationally that are in some stage of foreclosure, and 10.9 million, or 22.5% of homeowners with a mortgage that owe more than the property's worth.
All of us who are homeowners in South Florida, I'm in Broward County, 5 or 6 years ago, we're looking at homes that were selling right down the street from us, and we're just shaking our heads going, my goodness, how can they get that much money for that house? And now, of course, our homes have depreciated quite a bit, and maybe back to where they should be. All right, you sent me a list of ways to avoid foreclosure. It is really quite extensive. Can we go through it step by step and talk about some of the specific ways that we can avoid foreclosure? By the way, we're talking with Ellen Mitchel, who's a RE/MAX realtor with Executive Realty in Hollywood. Talk about forbearance or repayment plans.
Repayment plans, you would need to go back to the lender who you took the loan from and contact them, tell them that you're having a hardship in making your payments. And they will often put a forbearance in place, which means that they would stop your mortgage payments for a period of time and give you the opportunity to catch up. Then they would add those mortgage payments to the end of your loan. So you would have to show that you were again able to become current with your mortgage. Perhaps if somebody had a medical emergency that was obviously unexpected and they were hit with a large amount of bills or being out of work for a short period of time, that would be an ideal candidate for a forbearance, because once they were back to work, they would be able to resume their payments. So it's a stopgap measure for a short period of time that your lender is actually very likely to give you. Now, if you had an illness that was a prolonged illness with no return date back to work, it would be unlikely that the lender would allow a forbearance, because they wouldn't see that there would be any likelihood in the near term of you being able to go back to work to continue paying on that mortgage.
But in general, the banks are being much more cooperative now. Is it just because they have to? Because there are so many of these homes out there, they have to do something with them, and they don't want them.
Absolutely. Actually, one foreclosure in your neighborhood, it lowers the value of the neighboring properties by 9%. So you have to remember, say a large bank like Bank of America, if they have one property that goes into foreclosure, they may own several loans for other properties in the area. So they have a very vested interest in not seeing those properties go into foreclosure, and they're much more open to considering different options than they were even 6 to 12 months ago.
They're not only helping you and I out and the homeowner, they're watching out for the bank.
Absolutely. The foreclosure is a very expensive process for the bank. And through the foreclosure process, they wind up with homes that become abandoned and vandalized. The bank then has to go in and secure the property, spend thousands of dollars in bringing it up to market conditions to market it and sell it. So they have made a financial decision that it just doesn't make sense for them. It's not good public policy. It's not a good financial policy. And so they're very open and actually really reaching out This is the first time that I've seen the banks proactively reaching out to homeowners that are in default, suggesting that the homeowners consider a short sale.
You were explaining something to me that one of the banks was doing before we started recording. Who was that?
Actually, Bank of America and Chase are both proactively contacting their homeowners who are delinquent on their mortgages. Bank of America and Citi have a relationship with RE/MAX, where they've hired RE/MAX agents to go out and contact these homeowners and make them aware that they have the opportunity to make a graceful exit through the short sale process. They're offering homeowners between $5,000 and $20,000 for relocation assistance, and they encourage the homeowners to stay in the home during the sale process. They do not want abandoned properties. They feel that it's not good for the neighborhood, and it's not good for the value of the homes.
Yeah, and again, it's not good for the bank because the bank has mortgages on other homes in those particular neighborhoods.
Absolutely. So we've got Wells Fargo has a great program for their borrowers. I see that Bank of America has a great program. Chase and Citi, all very good proactive programs that they're offering relocation assistance. Bank of America's program currently, it doesn't need to be an owner-occupied property. It could be an investment property. That is a big change from what we had previously, which was that the bank would only consider a short sale on an owner-occupied property.
So if someone has been contacted by their bank, or they contacted the bank previously and really weren't getting much done, or much accomplished, I should say, should they, if they're in this situation of very possibly losing that house, should they go back to that bank and just keep pounding away?
Absolutely. They should engage under the short sale law. They do have to have the home listed for sale with a realtor. They should definitely contact a realtor, in my opinion, that has their certified distressed property expert designation. Those are people that are highly trained in the short sale process. You can check out my website just for some great free information. It's ellenhelpshomeowners.com. Again, www.ellenhelpshomeowners.com. Some great reports and good information at no cost to the consumer. And definitely get with an agent that specializes in short sales and work with that agent in contacting the lender, because you could have gotten a no 30, 60, or 90 days ago. And I would say persistence is definitely key. Things have changed. They change daily. And I would, out of the 10 properties that I'm working with now with Bank of America that are in foreclosure, not one of them is currently listed for sale. And it's really disappointing to see that homeowners can go through and avoid the foreclosure process, but they're not getting the information that they need.
And the bank really hasn't reached out to every one of them. They're just making that available, and it really is up to the homeowner to look into these programs.
The banks are now starting to really do a large outreach programs to reach out to the homeowners, but I think that by the time people get that far into the foreclosure process, they may owe other people, not just their mortgage note. So people are afraid. They don't know where to turn. They stop reading the mail and answering the phones. And so the bank may be proactively reaching out, but people are very suspicious of what the bank's intentions are. And I would say if you are contacted by a local realtor saying that they're working with one of the bank's programs, I would suggest calling the bank and verifying that, because unfortunately there is a lot of fraud, and we want to educate homeowners to make sure that they're dealing with reputable people that were assigned to them by the banks.
Can we talk about mortgage modifications? When this whole tumultuous situation kind of, well, I can't say peaked because it really hasn't peaked yet, but when it really went into high gear, we saw all kinds of advertisements for mortgage modifications. Different companies offering, specific programs and these wonder programs. We're not seeing them anymore. People really have to be careful with a mortgage modification, don't they?
Absolutely. I would suggest always going to the bank that your mortgage is with. And I have not seen very much in terms of mortgage modification and writing down the principal amount of the loan. I just haven't seen that. What I have seen, and I have to say Wells Fargo is amazing at this is allowing people to reduce their interest rate and maybe extend the term of the loan. So if they've paid the mortgage for, say, 10 years, they could go ahead and reduce the amount of interest rate, which will lower the payment, and then extend it back to 30 years to lower the payment even more. So the banks are being very cooperative in terms of mortgage modification on the duration of the loan and the interest rate, but not on a principal write-down.
Yeah, you kind of answered the question I was going to ask. I'm going to ask it anyway. If interest rates are lower than what most homeowners have on their current mortgage, are the banks giving up money just to keep that homeowner in that home and continue to make those mortgage payments? Or, like you said, do they, if they lower the percentage, do they always extend the years to make that money back?
No, absolutely not.
No.
They usually will be more than willing to reduce the interest rate, and they would offer the homeowner the option of extending out that term or not. People could actually shorten the term. They may choose to take what was a 30-year mortgage, and with the reduction of the interest rate, refinance it for a 15-year mortgage and shorten the term for the same payment or even a lesser payment. So I would say that the banks are being very flexible in terms of interest rate and the length of the loan.
What's the advantage of shortening the length of a mortgage, besides having it paid off sooner? But would it be that you have more equity in that home sooner in case you do have to sell that home?
Yeah, you would have more equity in the home. You would also be paying lesser interest. The shorter amount of time, the less interest you're going to be paying on the loan. So it would be the difference in interest you'd be paying on a 15-year as opposed to a 30-year loan could be tens of thousands of dollars. So it could be a significant savings to the homeowner. It's also it's a mortgage interest deduction on your taxes. So if you're taking more of a mortgage deduction at this time, it's going to be lowering your tax base.
Okay. Are there other drawbacks with mortgage modifications? Now, you had mentioned one there, but what would some of the others be?
I don't see that there is a significant. The fees are very low to refinance your first with your lender.
Oh, the cost to do that.
The cost to do that is usually very low right now. They're requiring very little paperwork, and that is if you're current. If you're not current, they probably will want you to go through and document that you can afford this loan if they were to reduce the interest rate for you or lengthen the term.
One of the ways you say a homeowner can avoid foreclosure is to rent the property. Would that be a last resort? Because then you're going to need some place to live.
I would be very cautious. I don't think that most people purchased a home to live in intending to be landlords.
Right.
So it's not something that I would recommend to most people. If you did consider renting your home, I would engage a professional property manager to make sure that everything was done correctly, because the lease needs to be signed. You need to deal with things like rent collection and repairs. I don't think that would be a good option for most people, but for some people it may be an option, and I would definitely consider getting a property manager if you were to go that route.
Good idea. On one of your brochures, you mentioned a foreclosure remains on a credit report for 7 to 10 years. Now, some people might say, just let the house go, but it's going to affect them down the road, isn't it?
I think when people say just let the house go, that they may not understand the full scope. With a foreclosure, not only is it on your credit report for 7 to 10 years, but if you were foreclosed on and you owed $200,000 and the house sold for $100,000, the bank would get what's called a deficiency judgment against you for the $100,000 difference, plus their attorney's fees. With a short sale right now, we're seeing that the banks are forgiving the deficiency judgment. Therefore, when the people sell the house, the bank takes less than what is owed on the house, and they say, you know what, it's a new day. Here is some relocation assistance money, usually in the range of $5,000 to $20,000, and you get to walk away free. There is no deficiency judgment against you. So that is a really big consideration that a lot of people may not be thinking of when they're looking at the big picture.
This kind of sounds like an oxymoron. You had listed something called a friendly foreclosure. What is a friendly foreclosure?
A friendly foreclosure is when people do a deed in lieu, and that would be the last resort. They're basically giving the keys back to the bank, and the bank is agreeing to give, the buyer gives them the deed, and the bank agrees not to foreclose on the property. I would say in most of the cases, that would be if you were down to the last days. I would still encourage people to engage a realtor and list the property for short sale. No matter what stage of foreclosure you're in, if the property's listed, your realtor can actually go to the courthouse with you, show that the property's listed, and you could have that foreclosure extended. And the judges and the banks are usually very happy to do that. They do not want to foreclose on homes, especially in areas like South Florida where we have such a large foreclosure inventory. It's just not a good public nor monetary decision for them.
Can filing for bankruptcy be a solution to foreclosure? I mean, can you avoid foreclosure by filing for bankruptcy?
I'm not an attorney. I do know that if you file for bankruptcy, that it can stall the foreclosure process. If someone was interested in consulting with a bankruptcy attorney, that would certainly be an option. But sometimes I've seen people go through file for bankruptcy to stall the foreclosure while they tried to sell the home through the short sale process. Mm-hmm. And so they used it as a delay tactic.
Yeah. When we talked about refinancing and getting lower interest rates, are there any drawbacks to that? Any negatives? I mean, it just sounds wonderful if you were able to do it. Are there any negatives to it at all?
None that I can think of. There is going to be a small cost associated with your bank, and usually they can finance that within the terms of the loan. But I think that it's a great opportunity for a lot of people if what's holding them back or, what's making the difference between them being able to make it and not make it is a couple $100s a month. That could be the place to find it on a long-term basis.
What about members of the military? I remember last time you were here, you were mentioning that there's special programs to try to help members of the military avoid foreclosure. And I know there's an awful lot of them who are in that situation.
There absolutely are, and yes, the banks, if they know that the person selling the home is with the military, they will extend every opportunity that they can to assist them through the short sale process. The military, there are people with special clearance codes like military, police officers, government employees that need a security clearance. With a foreclosure, they will lose their security clearance, so it can actually take somebody's livelihood away. And we would hate to see that happen. So the banks are very aware that with a foreclosure, they would lose their security clearance, and they're not out there to try to take away people's livelihoods. Yeah. And so they will really bend over backwards to assist military personnel or people with security clearance in being able to have a successful short sale.
You and I may not be able to buy a car because we have foreclosed on a home, but they could lose their clearance.
They will lose their security clearance if they have a foreclosure, which would jeopardize their livelihood. And that's another thing that people may not think about. And even if you're not in a job today that requires security clearance, you don't know going forward in the future what life has for you. Mm-hmm. So that's a really big thing to consider.
Let's talk about short sales for a while, and you kind of touched on it. Explain to our listeners exactly what a short sale is.
A short sale is where somebody owes more on the property than the property is worth. For example, if you bought a house for $200,000 and your mortgage is for $200,000, and today the house is worth $150,000. And
there's a lot of them out there.
There are a lot of them out there. We've got 10.9 million, or 22.5% of homeowners with a mortgage owe more than the property's worth. So almost 25% nationally, probably a lot higher than that in South Florida. Mm-hmm. And what they can do is list the home for sale. We contact the bank proactively for them and let the bank know that the people have initiated a short sale process. And depending on what bank they have, there will be some paperwork for them to fill out. They may be required to have 2 years of tax returns, write a hardship letter, and that would explain why they were able to afford the home at the time they bought it, what changed, and why they can't afford it now. It could be an illness in the family, a forced relocation, could be a divorce,
unemployment,
a lot of different reasons that people need to consider a short sale. And then you would have an agent that was, that specialized in this, would submit all of their paperwork to the bank. They would list the house for sale, and a lot of people think you list it for sale depending on how much is owed, and that's not the case. You list the property for sale at or around the price that other homes in the same neighborhood have sold for. And then you would continue to market the home for sale. When you get an offer, the home seller signs it, and then that contract needs to be sent to the bank, and the bank needs to agree to the sale as well.
Now, if I sell the house for $160,000 and I still owe $185,000, what happens with the difference?
The bank will eat the difference.
They'll absorb it.
They'll absorb the difference, absolutely, and they'll often give you relocation assistance, somewhere between $5,000 and $20,000, to be able to help you to make a graceful exit and get into your next place. And in most cases, they will forgive that $20,000 or $25,000 deficiency, and they won't come after you for it. That's a very important piece, and you need to make sure that whoever you're working with, it does have to be listed with a realtor to do a short sale. You need to make sure that that realtor is asking the bank for a forgiveness of that deficiency judgment.
So now the bank holds the mortgage on the house, continues to hold the mortgage on the house with the buyer, but loses, say, $25,000 on it and writes it off, and then they don't have to maintain that house, and they don't have to try to resell that house again.
No, a new buyer comes in, buys the house, the bank takes the loss, and everybody moves forward.
But does the mortgage have to be through that bank?
No,
the
absolutely.
New buyer? Oh, okay.
No, absolutely not. The new buyer can obtain financing from whomever they want.
Oh, I see. Okay.
The new mortgage company pays off the whatever is agreed to in the contract, and the new buyer does not need to use the prior owner's mortgage company.
See, I'm lucky enough not to have gone through this. Much about what we've talked about today, people shouldn't attempt to do any of this stuff by themselves, should they?
Well, they can't.
They can't.
With a short sale, you're obligated to have the house listed for sale through a realtor. And I think that was really wise of the federal government, because it is a very complex process. It does change on a daily basis, and they also wanted the banks want maximum exposure for the home. So if it was a homeowner putting a for sale by owner sign in the front yard, it's not going to be seen by the number of people that an agent putting it into the multiple listing service. So they want to make sure that they're having the maximum exposure to that home, to the marketplace.
We have just 2 minutes to go.
Oh my goodness, how does the time go so
How
quickly?
does somebody whose home may be in foreclosure or going to be in foreclosure, how do they find the right person, the right realtor to handle this?
I would suggest that they find someone with their CDPE designation, Certified Distressed Property Expert, that specializes in short sales. And they can certainly contact me. My website is www.ellenhelpshomeowners.com, www.ellenhelpshomeowners.com, and I would be happy to speak with anybody and just see if this is a reasonable option for them.
And again, go back to your bank.
Yes, absolutely. They would need to go back to the bank that their first mortgage is with and contact them, and the bank will tell them that they need to have the property listed for sale with a local realtor.
Because as Ellen mentioned, banks now, and especially this time of year, I don't think we have time to get into why you mentioned this time of year, but especially this time of year, banks are being more cooperative.
Yeah, there are very few properties that are in foreclosure that are on foreclosure properties that are on the market right now. We're in the holiday season, and the banks tend to not flood our market with inventory, so we have a great window of opportunity for homeowners needing to sell their homes through either traditional or short sale process and not be competing with a lot of foreclosures in their neighborhoods.
Ellen Mitchel is a RE/MAX realtor with Executive Realty in Hollywood. Your website again?
www.ellenhelpshomeowners.com, www.ellenhelpshomeowners.com.
Let's hope we helped somebody on our program today, and I have a feeling that there might be an awful lot of people listening to the program on one of our Lincoln Financial Media radio stations who are facing this situation, and maybe we could help them out. Maybe we did with this program. Thanks for your input.
I certainly hope so. Thank you so much.